So if you think of the average American, they are getting punished in the economy, right? That K-shaped economy is really, really hurting a very large portion of it. And the beauty of Bitcoin is the very simple story. They are never going to stop printing money, so therefore Bitcoin will never stop going up. And if you simply think of Bitcoin as savings technology, all you have to do is go out, work hard at your job, make money, spend less than you make, and then put the extra savings into Bitcoin, and then allow Bitcoin to benefit from what we know is going to happen, which is they are never going to stop printing money. And I think that that simplicity is actually very attractive to some cohort of investors. And now you see investors saying, wait a second here, this quote unquote debasement trade means that I don't have to go do all that work. I can simply just go and buy something like Bitcoin. And I think that really maybe the story of finance of this decade is that Bitcoin is becoming the hurdle rate, right? Historically, we've looked at things like the S&P. If you go back to 2020, the S&P is up 100% since 2020. Priced in Bitcoin is down 90%. All of the returns that people are talking about in traditional finance, most of them are negative because no one can beat Bitcoin. And so if you can't beat it, then we just say you got to buy it. And I think that's what a lot of investors are starting to do.
Pompliano starts with a striking observation. Traditional finance is too complex for the average person. If you want to invest in the stock market, you have to track quarterly earnings, management changes, interest rates, product launches, supply chains, and dozens of other variables. It's a full-time job just to keep up. And that's why he says Bitcoin's simplicity is its beauty. At its core, Bitcoin is a savings technology, not an investment that demands constant monitoring. You don't have to guess product cycles or watch the Federal Reserve's every move. The principle is straightforward.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I have to tell you, when we talk about crypto, Bitcoin, you want to keep up to date. It's a big, important market now with massive participation, but the story's always the same, isn't it? I mean, it's sort of like store of value, more people know about it and want to participate in it. Is there anything that's kind of moving the needle on a fundamental basis or a flow basis at this point?
Well, look, I actually think one of the problems with the traditional financial market is that people have to pay attention to it, right? If you think about what's going on in the stock market, I have to know what the company is, what products they're constantly coming out with, who are they selling them to, what's the latest earnings report, what's interest rates, all this information. It's very hard. And so if you think of the average American, they are getting punished in the economy, right? That K-shaped economy is really, really hurting a very large portion of it. And the beauty of Bitcoin is the very simple story. They are never going to stop printing money, so therefore Bitcoin will never stop going up. And if you simply think of Bitcoin as savings technology, all you have to do is go out, work hard at your job, make money, spend less than you make, and then put the extra savings into Bitcoin, and then allow Bitcoin to benefit from what we know is going to happen, which is they are never going to stop printing money. And I think that that simplicity is actually very attractive to some cohort of investors. And now you see investors saying, wait a second here, this quote unquote debasement trade means that I don't have to go do all that work. I can simply just go and buy something like Bitcoin. And I think that really maybe the story of finance of this decade is that Bitcoin is becoming the hurdle rate, right? Historically, we've looked at things like the S&P. If you go back to 2020, the S&P is up 100% since 2020. Priced in Bitcoin is down 90%. All of the returns that people are talking about in traditional finance, most of them are negative because no one can beat Bitcoin. And so if you can't beat it, then we just say you got to buy it. And I think that's what a lot of investors are starting to do.
That's true. Now, the vast majority of Bitcoin that an individual saver is buying is being sold by somebody who already owned it, right? I mean, there's a massive industry that's essentially just kind of middleman, frictional. It's mostly about trading. It's not about anything else. It's not about opening up a savings account where the bank creates the asset.
Well, there's always going to be trading volume in any asset, right? People are obviously going to constantly be trading an asset back and forth. But what you see is more and more Bitcoin is being taken into what we call illiquid supply. So over time, that percentage continues to increase where every Bitcoin that I buy, no one's ever touching again until I die. Right? And I think there's a lot of Bitcoiners who believe the exact same thing. And so what you're starting to see is that illiquid supply numbers creeping up. And so as more capital comes in, the only thing that can happen is if you have a finite supply asset, more people want that asset, but the people who hold it aren't willing to sell it, the price has to go up to clear the market. And that's why Bitcoin continues to go up over time.
Gold has done better than Bitcoin this year. Do you think in the crypto community they see gold as an ally or is it a competitor?
Yeah, it's funny that on one hand, Bitcoin and crypto folks, they're brothers in arms, right, in the fight against currency debasement. On the other hand, I think that the gold bugs are having a field day because they're outperforming Bitcoin. I think gold's up 50% this year. Bitcoin's up about 33%. What I will say is that the average return since 2015 of Bitcoin in Q4 is 60%. So the gold bugs, you're not at the finish line for the year yet. Let's see what happens. But if you go back just 5 years, right, gold is up about 100%. And during that time, Bitcoin's up 1,000%. And so I think that they both benefit from the same thing. It's just that you have a smaller market cap asset that's got a lot more volatility in Bitcoin. And therefore, it's kind of gold with wings is the way I like to think about Bitcoin.
What's the difference between those investor pools, or do they overlap?
I think that you generally are going to have an older audience that's got gold. You're also going to have the central banks today, institutions. But very quickly, you're starting to see more and more people that own Bitcoin. They're getting older. Right? It's been around for 15, 16 years now. But also, I think that people aspire to have the central banks eventually hold Bitcoin. The question is just, when do they do that? And what are the geopolitical things that start to transpire if all of a sudden you're saying, we're going to go put Bitcoin in our actual treasury reserve?
Bitcoin is retreating this morning after hitting that fresh all-time high above $125,000. It's the first time it's been above the $125,000 level ever. Just after noon, I believe we were down under the $122,000 mark. What do you make of this pullback? Is this just profit taking? What do you see here?
Yeah, I tend to not read too much into the one-day moves. I see risk assets in general. Stocks are down today. It looks like gold is touching 4K again as we speak. So everything's behaving a little bit differently, but the one-day moves I tend not to read too much into. I think the medium and longer term trend for Bitcoin is pretty clear, which is higher. We can get into some of the reasons why that is, but I think, shorter term, it's probably just profit taking, people thinking, okay, that was a really quick run up in just a few days, so let's maybe cool it off a bit.
Yes, lower rates support risk assets, including crypto, but he warns against overemphasizing their impact. This isn't 2008 or 2020, where central banks slashed rates to zero in response to a global crisis. Instead, he sees this as a measured, gradual cutting cycle, a series of small adjustments across global central banks. Each cut adds a little fuel to the fire, but the main driver remains the long-term erosion of fiat purchasing power. In other words, the Fed's actions might change the tempo, but the melody of Bitcoin's rise stays the same.
Yeah, let's talk about some of those trends. I mean, one of the things that I've been watching are the net flows into Bitcoin ETFs, and over the past week or so, they have been going up. What does that say about institutions moving money around in the market? What does that say about Bitcoin in this trend that you're talking about?
Yeah, so I think just undeniably, the ETFs have been really, in multiple ways you could look at it. Some of the most, and what the Bitcoin ETFs, obviously, we're talking about, some of the most successful ETFs of all time, whether it's assets under management in a short period of time, whether it's liquidity, whether it is profitability for the issuer. There was an interesting post this week that showed IBIT for BlackRock iShares, that family of ETFs, is their most profitable, based on annual revenue, most profitable ETF, which is really pretty mind-blowing because they have some of the largest ETFs out there. So I think it's just undeniable that these ETFs have been a massive success. And you have to look at this in conjunction with the fact that there still are a ton of asset allocators out there who are not including the spot Bitcoin ETFs for their clients for a variety of reasons, whether that's Vanguard, other investment managers, in the financial advisory world. They might allow it technically, but then if you kind of peel behind the curtain, it's really limited, the set of clients that they offer it to. So there's a lot more to be done here. Vanguard, just in the last week or two, there was a report that they are looking to lighten up that restriction on Bitcoin ETFs. I haven't seen great confirmation from Vanguard that they're looking to do it, but that is out there. And then you also have JP Morgan and Morgan Stanley coming out with positive takes on Bitcoin just from an investment perspective. Again, I think more things have to happen before financial advisors at those companies are outright putting their clients into the ETFs. But all the wheels are in motion, and I think that's the path that we're on.
Yeah, I see your point about IBIT specifically. I believe it's nearing $100 billion in assets under management, which is just huge growth for that ETF. I guess I want to ask more about this work that needs to be done to get institutions to buy into crypto more, specifically with the ETFs. You're saying that there's more that needs to be done. What is it that you see that needs work? I guess is it educating investment advisors? Is it educating these institutions, or is it just wait and see?
Yeah, I think it's a mix of educating the institutions at the senior level, also educating the institutions at the advisor level. But then the real shoe that needs to drop is the institution itself needs to kind of open the doors for advisors to put their clients' funds into the Bitcoin ETFs. So right now, there are still a bunch of restrictions. It might say, hey, you can have a client buy one of these spot Bitcoin ETFs if they come to you and sign something that says they want the highest risk account or something like that. So that's not really going to put a ton of assets into the spot Bitcoin ETFs. The other end of the spectrum would be that an advisor can just have the discretion to say, okay, my client has a pretty balanced, growth portfolio, something like that. I'm going to put 2 to 3% into Bitcoin via one of the ETFs, and that's a prudent thing to do. We have not gotten to that other end of the spectrum. So yeah, I think it's a mix of education. It's a mix of just time going by and Bitcoin, being what it is. For the last 8 out of 11 calendar years, it's the best performing macro asset. If this year keeps going the way it is, gold is beating it right now. But I'm kind of laughing as I say that, because if gold is number one and Bitcoin's number two, then you're kind of pointing to the same thing. It's this debasement trade that JP Morgan has talked about. So yeah, I think it is kind of a slow drip, but then we'll have announcements as time goes on. You'll see some big investment firm kind of open the doors, and then I think it'll be a domino effect and more institutions will do it.
Going to some of the other trends that we're watching, I spoke with Lale O'Connor of eToro yesterday, and she emphasized just how much the macro picture is back in focus for crypto investors. I'm curious where specifically the government shutdown fits into that, because historically markets have kind of shrugged off the economic impact of these shutdowns. Is that true for Bitcoin, and does this current shutdown that we're in play into markets at all?
Yeah, I tend to say that government shutdowns like the one we're experiencing now tend to be either shrugged off, as you said, by Bitcoin investors, or if anything, viewed as a positive. And it may sound odd to say that, but I think the way it could be viewed as a positive is that Bitcoin investors will say, okay, this is just another item causing fiscal uncertainty. And likely most of the government shutdown outcomes have been they agree to spend more money. And, there's kind of a song and a dance that happens before it, but the end result is, okay, we're going to end up spending a bunch of money on some variety of projects. So that's where I think this one will end up. So I think it really just highlights the value of an asset like Bitcoin or like gold that's outside of the system and benefits from all that extra spending and monetary debasement.
The other thing that's coming down the pike is, of course, rate cuts. There's another one expected this month. You have some expecting as many as 5 total through next year. And obviously, rate cuts are good for crypto in the past, but how much of that is priced in already? And will we see these run-ups for Bitcoin or altcoins driven on rate cuts as they come in?
Yeah, so this is an interesting one. I tend to think that rate cuts are a small factor contributing to Bitcoin price appreciation. And even just risk assets in general, Bitcoin price appreciation, equity price appreciation. I don't think we're in an environment where a 25 or 50 basis point rate cut to the Fed funds rate matters too much. I don't want to say it doesn't matter at all. I do believe on the flip side, in 2022, that rate hiking cycle certainly did harm equity markets and Bitcoin markets. But that was also a rate hiking cycle that happened the fastest in history. And it was in response to inflation that was the highest in at least 40 years. So that was pretty dramatic. I think the cutting cycle this time is not going to be dramatic. I think it's going to be, we've already seen a cut here, cut there, then they pause for a little bit, revisit. I think it's going to be more like that. This is not going to be a cutting cycle like we saw in 2008, response to a massive crisis, or 2020, response to a massive crisis, cut rates to zero, keep them there for a really, really long time. That's not what I'm expecting. That's not what most of the market is expecting. So I think it's incrementally helpful for risk assets if they're cutting rates. And by the way, it's not just the Fed, it's most central banks around the world are engaging in a cutting cycle right now. So I think it just adds a little bit of fuel to the fire. But I wouldn't say it's the top thing driving the price of Bitcoin right now.
For Pompliano, Bitcoin's rise represents something larger than an investment trend. It's a cultural and financial shift. It's the first global decentralized savings network in human history, a form of money that's owned by no one, controlled by no government, and accessible to anyone. He believes that as more people understand this, from individuals saving their paychecks to institutions managing billions, Bitcoin will continue to transition from a niche technology to a foundational asset in the global financial system.